All right, I am at my sister's house in sunny Brownsville, Oregon. And before I get started with the housing market update, I do want to say thank you to every one of my friends, everyone I know who said prayers for my mom. Went in the hospital, 911, diagnosed with lung cancer on Tuesday. I arrived promptly Wednesday. And it was not clear whether or not she was going to make it really through the next couple days, but she's been strong, and she started chemotherapy today, and this is Thursday as I'm talking to you. And I just want to say thank you for the prayers. I do believe in the power of prayer, and I am grateful for all of you who are supportive of my mom and my family. So thank you very much. And let's get into the housing market update, because the market don't care. The market keeps going on, but I know you do. So let's go. All right, you know what? There's gonna be some background noise because you know what? I got 3 dogs and a cat around me, not to mention my sister's making dinner. So hey, we're gonna roll with it. Let's talk about the big 3. Prices are steady, no real change right now. Inventory's up, and rates are up too. Let's get into the headline news for the week. We got Middle East conflict, though. It's continuing to hurt interest rates. There's not a lot of economic news. I told you that in the Monday rate update. And so we're not going to talk a lot about news other than what the Middle East is doing. Buyer beware. We're going to talk about solar panels today. I've heard some incredible, and I've seen some incredible horror stories with solar panels. Hawaii is a great place for solar panels, but not for everyone, and not every type of financing for solar panels is the way to go. Do I get pre-qualified or do I get pre-approved? Which one is the best for me? Because no one size shoe fits everyone. No one size. It depends on where you're at and on your journey to home ownership. A pre-qual may actually be good for you, especially when you're starting out. We'll kind of get into that. We're going to talk about FAQ Friday. And then we'll look at VA rates. Yes, they jumped again. We have crossed over the 6% threshold for VA rates. We're above 6%. Conventional, we're above 6.5%. How long will that last? Well, let's get into that. Let's talk about the Strait of Hormuz. Let's talk about Iran and what the impact of everything that's going on in the Middle East is having on mortgage rates. We saw mortgage rates surge this week, above 6.5%. I keep thinking of De La Soul, Straight Feet High and Rising. Great song.
3, that's a magic number.
But 3 feet high and rising, no. We're talking 7-month high and rising high for interest rates, mortgage rates, as the Iran conflict goes into and finishes up its 4th week. And really, the oil spike is the root cause. We're now over $100 per barrel with a lot of upside risk. If we get to 150 a barrel, it's going to get really ugly, people. And I think there's a lot of fear of that. And part of it is, some of the news that we're getting. We don't know what's right and what's wrong when we're listening to mainstream media. I really don't watch the mainstream media, but you know what? Markets do, and so they react. We got this oil spike. We have inflation expectations rising again, all right? There are some economists who are talking about inflation jumping from where we're at right now, right around 3%, to up to 4%. And that's kind of realistic to expect if this conflict drags on. And then the bond market, really, that's what's driving the interest rates. The 10-year Treasury yields have basically shot up again to 4.3. I think I saw 4.4. That's pretty high. And you think the spread between the 10-year and the 30-year is usually about 1.5. Well, guess what? 10-year Treasury goes up, mortgage rates are going up. And here's the other thing, the Fed. What's the Fed going to do in April? Right now, there's about a 95% chance that the Fed doesn't cut rates in April of 2026. People are talking about the next cut maybe being in 2027. And if inflation spikes, then guess what? We're going to see the Fed maybe look at raising interest rate. A lot on the plate right now. And you know what? Again, this is nothing that you control. Your best control is to curb your spending, to make sure that you're in a good financial position to withstand the increase in prices, and maybe start cutting back on some things. We all gotta, what's that saying? Gotta tighten the belt. All right, right now we gotta tighten the belt while we're going through this conflict with Iran. We're gonna talk about solar panels and when having solar panels hurts you. You would think living in Hawaii, especially where I live in Ewa Beach, it's sunny 365 days a year, pretty much. And having solar panels is great. And I will tell you, I have solar panels on 3 of my 4 homes in Hawaii. It makes a huge difference in my monthly electric bill. We're talking $300 to $400 difference in my electricity bill because I have solar panels. You would think, all right, I'm gonna buy a home, I'm gonna increase the value of my home, I'm gonna put solar panels on my home. How are you gonna finance those? And this is where I see people getting in trouble. And we're gonna look at it from the perspective of a buyer, from the perspective of a homeowner, and from the perspective of a seller. Because I am having people right now, just in my conversations with realtors who are either helping buyers, sellers, or homeowners, I'm having conversations right now that are alarming and really putting buyers and homeowners at risk. So, buyer beware when it comes to solar panels. We'll break that down right now. The biggest thing I see and the biggest impediment to home ownership and people putting offers on homes is leased solar panels. Now, when you have leased panels, you don't own the panels, you have a contract. There is a big difference. And when you're a home buyer, all right, you don't own the panels, you are inheriting the contract. You're gonna have monthly payments. That payment, guess what? That payment gets counted into your DTI. And if you're trying to buy a home that has leased panels and the payment is $250 a month or $300 a month, I've seen over $400 a month, guess what? You may not qualify to buy that home. It is something that you need to look at. It makes your loan approval harder. And guess what? As a buyer, it's gonna reduce your flexibility to sell your home when you go down the line and you are looking at possibly selling your home. Now, here's something too. If you're not going to own the home for more than 3-4 years, it doesn't make sense in most cases to put solar panels on the home at all, because the cost of solar panels to buy enough to really impact or lower your electric bill, you're looking at probably 20 to 30 panels, and you're looking at least 2 battery banks or a bank of 2 batteries to make it worth your while. Well, that's gonna cost you probably anywhere from $50,000 to $80,000 if you buy it outright. All right, I saw the loan for solar panels for one homeowner over $115,000 financed with a balloon payment to lease, not own, lease solar panels. Hello, that's not a good idea. Buyer beware. When you become a homeowner, sometimes you don't talk to your lender about whether or not they should put solar panels. And guess what? You see the ads and you're like, I'm gonna put solar panels on my home. And then you end up leasing those solar panels. Well, you know what? And you think that, it's probably going to increase the value. Well, you know what? It may not increase the value of your home. All right. Matter of fact, appraisers often don't give you any value or very little value when the panels are leased because you don't own that asset. And you can see headaches on transferring, especially considering many solar panel companies go out of business. They don't tell you that because they want to sell you the lease. Those transfer headaches can either derail or delay closings, and I have certainly seen that. And as a homeowner, guess what? This buyer may say, I want you to pay off that lease. And you know what? That's a $60,000 lease. If you got a $60,000 in equity, well, guess what? Now you're in the red when you sell that home. I have seen it happen. I have had my buyers make the sellers pay off the lease. And you know what? The sellers did it because they needed to sell their home. Very, very risky when you are a homeowner and you are looking to lease solar panels. And guess what? Payments could go up. I was just looking at a balloon payment. It was like $350, $330, $340 for the first 15 or 18 months. So first 18 months was around $350. Guess what? If you're smart, you can keep your energy bill. I know in my house, when I didn't have solar panels, I kept the price down to below $300 a month just by being strategic with using my AC. But after 18 months, guess what? Those solar panel payments went up to over $480 a month. That's insane. And those escalating payments offset what you would save if you were just prudent using the electricity on your home. So homeowners, really really a bad idea to lease solar panels. You can get a loan, and I've done that, 0 interest loan for 4 years. I think is one of the panels I got was 4 years, 0 interest, and I paid it off over 4 years. I knew I was going to own the home long term. So really, you got to know your situation. Do not lease. I say again, as a homeowner, do not lease your solar panels. I should send this to every one of my homeowners before they make that mistake. And let's talk about the sellers. As a seller, the buyer, just know that buyer must qualify for that lease separately. All right, it can delay your closing. It can put your transaction, make it dead in the water before you even get through, the first 10 days, because whatever the cost of that lease is, it is going to have to be counted into the debt to income for the buyer. And if the buyer's already strapped and they're adding $250, $300, $400 a month, it's kind of like another HOA fee, right? They may not qualify. As a seller, it's going to reduce your buyer pool. It's going to reduce the number of people. And again, I don't tell them not to buy. I don't tell my buyers not to buy, but I do tell them buyer beware. That's the first thing I look for on a home for my buyers is, do they have solar panels? My first question when the answer is yes, are those solar panels leased? Because that buyer is not going to own those solar panels. And then you have title issues, because if the solar panels are leased, there could be a lien on the mortgage that you have. There might be title issues. There may be some unclear terms that could surface. And guess when these terms surface? It's right at the end of the transaction. So sellers, just know, this is where the deal is going to fall apart for you if you have leased solar panels. It can happen, it has happened, and it will continue to happen. The bottom line on this, folks, is solar panels are great. Again, I have solar panels on 3 of my 4 homes in Hawaii, and I want to get them on my 4th home. Not sure if I will yet, because I don't know if my situation is going to change with owning that home. So I don't want to take that financial risk or assume that financial risk to put solar panels on the home. Just know that when you buy a home and they have a solar panel lease, it is a contract. It's not ownership of those panels. All right. Yeah. You know what? For a period of time, the repairs may be done by that solar company. But you know what? Again, I said it earlier. A lot of solar companies go out of business, and it becomes very difficult to get any information from who has taken over those solar panels and the maintenance on those solar panels. If you have questions on solar panels, talk to an expert. You can talk to me. I can answer some of your questions. And if you got even more detailed questions, I know the experts who are not going to screw you over, because I've used them and my clients have used them. Just know, I'm your loan officer, I'm your friend, and I know solar, and I don't want to see you make that mistake. Let's talk about, should I get pre-qualified or should I do a pre-approval? Well, there is a difference between the two, and a lot of people say never do a pre-approval. I do pre-approvals. I do pre-quals. I do a lot of pre-qualifications, especially early in the process, because just know when you get your credit pulled, that credit report is only good for 4 months. And then I have to pull your credit again. And if we're 6 months out, 8 months out, I don't need to pull your credit necessarily. If it looks like, if you think that you have some credit issues, then it might be a good idea to pull your credit and to really kind of dive deep. It's kind of like doing surgery. I don't want to take a knife to do the surgery unless I absolutely have to. And right now, when you're just starting the process, you know what? Maybe a scope or an x-ray is more appropriate. And in the case of buying a home, a pre-qualification is more appropriate. But what's the difference? All right, so let's look at a pre-qual versus pre-approval. Pre-qual, hey, again, some people do it. I do that with a lot of people right at the beginning. But when you're putting an offers band, you want that pre-approval. And not only do you want that pre-approval, you want that pre-approval from somebody where that pre-approval carries weight. When you're working with a 4-letter bank, you know what, not only may not, but realtors do not want to work with 4-letter banks because they don't know the loan officer, they don't know the quality of that pre-approval. When you're working with a loan officer with a good reputation, local, then guess what? Your pre-approval letter is going to carry a lot more strength than one from a 4-letter bank. But let's look at some of the difference between a pre-qual and a pre-approval. A pre-qual is an estimate of what you can afford. All right, a pre-approval is the verified amount I verify the amount that you're pre-approved for. The pre-qual is based on self-reported income and self-reported debt. A lot of times I will just, as a matter of fact, almost all the time, I will have the buyer pull their own credit. You can do it for free 3 times a year, all right, once from each of the 3 major credit bureaus. Send it to me. I'm looking at really what your monthly payments are. I'm looking to see if there's any late fees. If somebody's really on the borderline, I may pull their credit early just to see what we can do to help them get their credit score up before they start putting offers in. But in most cases, if you're 6 to 8 months out, probably gonna do a pre-qual. Whereas a pre-approval, dude, that's a hard pull. All right, I gotta go in. When I put my name on that letter, I gotta make sure that we are good to go, income, assets, and credit. All right, we already talked about the credit pull, soft check or no credit check at all on a pre-qual. Pre-approval, you have a hard pull. A pre-qual is fast and much less formal. Although I will tell you this, when I do a pre-qual, I pretty much do everything except pull your credit. I wanna see your numbers. I wanna see your income. I wanna see your assets. Again, because what I'm doing 6 to 8 months out is making sure when you're ready to put those offers in, we're good to go. You don't want to wait till the last minute if you know you're borderline. If you're borderline, we're probably going to pull your credit. And then the difference, obviously, on a pre-approval is it's much more detailed, much more formal. A pre-qual, it's a great starting point. A pre-approval gives you a strong advantage when you're putting offers in. And if you have a pre-qual, not going to be taken seriously. Matter of fact, your realtor will probably not even submit one. They'll tell you, go get pre-approved first. When you submit a pre-approval, all right, that's what the seller wants to see. That's what the seller agent wants to present to their seller. And if they got a pre-qual, because the seller don't want to waste their time, the seller's agent don't want to waste their time, that seller's agent is going to not give as much priority to that pre-qual letter as they do the pre-approval. Big difference. They're appropriate, but they're appropriate at different times in the process. This is the FAQ Friday for this week, for the last week of March. What is better, renting or buying? I'm gonna go over one excuse or one reason I hear people say I am going to rent rather than buy. I hear all the different reasons for not buying a home. And here's one of the things that I hear from a lot of people is, I am just gonna rent and I will invest the difference. And you know what? While I think that is a great idea on the surface, in reality, it's much different. And here's why. Because most people who are renting for less than what their mortgage, they're not investing the difference. Don't fool yourself. You're spending that money for the lifestyle that you want to live in, and you don't invest. And what happens to that money? Nothing. And remember, you're paying a mortgage no matter what. You're just paying your landlord's mortgage. And let's talk about how long you're investing. All right, you got a 30-year mortgage. That's 30 years of forced investment. So that's what home ownership is. Home ownership is a forced investment. And we talk about, paying yourself first. You're paying that mortgage, but you do that consistently. Every single mortgage payment, guess what? You are paying down that debt. That home is your piggy bank. And that interest that you're paying at the end of the year, well, guess what? That is tax deductible. You get this 1098 from the bank, tells you how much interest you paid. You can deduct that from your taxable income at the end of the year. Can you deduct rent from your taxable income? Sorry, Charlie, no, you cannot. And that is another benefit. Owning a home is forced savings, it's forced investment. And over the last 30 years, guess how much home prices have appreciated? Over 400%. The stock market has, in that same time, has actually increased by over 600%. But let's also talk about taxes. When you take money out of the stock market, you pay capital gains taxes. You got short-term capital gains, you got long-term capital gains. What about your capital gains on a home? If you're single and you sell your home and you've lived in it for 2 of the last 5 years, guess what your capital gains gonna be? Well, it's gonna be nothing on $250,000, up to $250,000 if you're single. Over $500,000 if you're married is exempt from capital gains. You're not gonna get that same exemption when you're investing that money in the stock market. All right, the smart investors own real estate and they also own stocks. Those are the two ways that people take advantage, or those are the two ways that people become wealthy. And let's also remember this: the median net worth of renters is $10,000. The median net worth of homeowners, $400,000. That's a big difference. And I tell you what, I see people who don't own homes. They're getting out of the military. They have $10,000 saved. Maybe they have a TSP, but they can't touch that TSP for a while. Those people who own homes, and I see it all the time, they leverage homeownership to make more money as well. So just know this, folks. The answer to renting, investing, the difference is better than buying a home. Man, Larry knows that is not true. And while there are some people who do it, most people who say they're going to do it don't. Next week, we'll probably talk about some other reason why you should buy versus rent, or we're going to dispel some of the myths about home ownership for you in next week's FAQ, whether you should rent or whether you should buy. Now, let's get into VA rates. All right, VA rates, we're now above 6%. You can see, look at that. Oh my gosh. Now, that is just ugly. I ain't gonna lie, man, that is an ugly baby right there. All right, above 6%, we just went above that. And it's really the highest that we've had since November of 25. And it's going to continue to be volatile. We need some closure to what's going on in Iran. We need the Strait of Hormuz open. We need oil prices to come down. We need some good news economically. We need the government to open, in particular DHS, funding for DHS, those things we need to really help the morale of our countrymen and to bring prices down. I think we'll get it. I'm an optimist, though. I think we'll get it. But you know what? The proof is in the pudding. We got to see some action, and we need to see some closure. And here's the other thing happening next week. It's jobs week. First week of the month, it's always jobs week. Next week, we'll get the BLS jobs report, the Bureau of Labor Statistics jobs report. And that, my friends, will move the needle for interest rates. It could be a big monster week if we get stoppage of fighting in Iran, we get forward positive, peaceful movement, and we get a jobs report that shows unemployment going up, fewer people getting hired. Of course, it could go the other way. All right, remains to be seen. But stay positive. Again, thank you all for your prayers this week on my mom. She ain't out of the woods yet, but you know what? I'm not giving up on her. She's pretty damn strong, and I know that she's going to come through this, especially with support from friends like you. All right, have a great week. Have a great weekend. Aloha.